Thanks for plugging in and Rethinking the Dollar. I'm excited to have my guest, Robert Wenzel, editor and publisher of the economicpolicyjournal.com, sit down with us today to discuss his book, The Fed Flunks, My Speech at the New York Federal Reserve Bank, as well as to get his take on the global economy. I'm sure you're going to find this to be very informative. Click the subscribe button below for more RTD interviews as well as monetary news updates. Enjoy this conversation. Thanks.
Welcome to Rethinking the Dollar. I'm excited to have my guest, Mr. Robert Wenzel. He's the editor and publisher of Economic Journal of PolicyJournal.com and of Target Liberty. He's also the host of the podcast, The Robert Wenzel Show. Mr. Wenzel is well known for forecasting the 2008 financial crisis in real time online at his blog, economicpolicyjournal.com, and actually was invited to speak to the New York Federal Reserve Bank about his forecasting. So, Robert, welcome to Rethinking the Dollar.
Hi, Michael. Glad to be with you.
Well, I appreciate you sitting down with me. Had a chance to thumb through your book and read a little bit of your speech, and I thought it was quite interesting that you were kind of somewhat of a critic of the bank, but yet they invited you to speak there. So I thought that was definitely something that was bold on their part. But I'm looking forward to speaking with you to get into more of that and also get your take on what's going on globally now with everything that's unfolding. So without further ado, wanted to jump into some questions. I know you're a busy man, so I want to be respectful of your time. I usually start off with some Rethinking the Dollar questions. And the first one being, what comes to mind when you hear the words rethinking the dollar?
Okay, well, what comes to mind is where the dollar was at one time, where it was backed by gold, and is no longer backed by gold at this time. And what we have is a complete 100% fiat currency, where the government, through the Federal Reserve, can print as many dollars as they want, which is extremely dangerous and could lead to severe price inflation somewhere down the road, and in fact has led to the booms and busts in the economy. It's a very dangerous thing.
Right. Now, how important is it for everyday citizens, those who are reliant upon our dollar, to begin taking an interest in these matters, becoming more...
Michael, I'll tell you, it's very important.
Yeah.
And the reason is because this impacts what you do as far as savings, as far as investment, as far as borrowing money, depending upon where the Federal Reserve is in the business cycle, whether they're printing a lot of money, not printing a lot of money. It has serious impact as to whether you want to lock in some kind of contract with a long-term rate, say a long-term lease for a business, or if you want to borrow money, do you lock in now, or do you sign up for some type of fluctuating variable rate? And that all has to go back to the Federal Reserve and what they're doing as far as printing of money and pushing interest rates around.
Right. Why is there no practical information on the subject of money in our educational system? I mean, being that this is the most important subject of our lives, why is there no information for your commoner to know?
Well, the simple answer is that the schools, in many, many ways, whether the public schools and even most private schools, are generally influenced dramatically by the government. And they try to make something very complicated, difficult to understand, and not something that most students or even most teachers at a high school level, lots of college professors just simply don't understand the mechanics of what's going on and how important it is. But the mechanics, bottom line, when it comes down to it, what the government is doing is printing money. And they do it in a complicated way to make it difficult for people to understand, but that's what's going on.
Right. Now, if you were given a chance, to be in front of the globe at the podium to give the Robert Wenzel Global State of the Economy address, how would you address the public?
I would say right now, watch out, because the economy, the structure of the economy is extremely weak. It could break in many ways on a global level. China is in serious problem. We don't know what's going to happen with China from here. We have problems with the United States economy, especially with interest rates. The Federal Reserve will not be able to keep interest rates low forever, even if they choose to do that, or they think they're going to raise rates slowly. That could turn on them at any time. We may have China selling Treasury securities at some time. That will put pressure on rates, which will cause the Federal Reserve to buy that up, which means printing more money, which will ultimately be extremely price inflationary and push interest rates up. At the same time, you have problems with what Obamacare will eventually cost, the fact that Social Security is running out of money, parts of Medicare are on a deathbed right now. There's serious structural problems across the economy, both in the United States and globally, and it's going to be a mess. It's a time. I'm advising people. I have something I call the EPJ Daily Alert, which is a daily report on the economy and investments. And I'm advising people right now to keep buying gold and silver, even if it does dip down short term. The long term, with the way the structure of the economy is, at some point this whole thing is going to explode, and gold and silver is going to be the place to be. But at the same time, because I expect the structure to be shaky in so many ways, I'm telling people, put 50% of your money in gold and silver, but for the most part, you want to split it up between that 50%. You want to keep another 50% in cash, because things could churn in a number of different ways. You want to have cash available to take advantage.
Right. That's an interesting allocation there, because that's the first time I've ever heard somebody actually give a full-fledged, allocation of what to do numerically with 50% here, 50% there. So I definitely appreciate that. Definitely something, worth studying deeper into. Now let's dive into your book a little bit, The Fed Flunks. I mean, it was based upon your speech that you gave at the Fed, but prior to your actual speech there, you actually were one of the people who predicted the whole financial bubble bursting back in 2008. So how did you actually get to that forecast, and what were some of the things you used that allow you to see it, but yet those in charge of our system weren't able to see it?
Yeah. Well, I'm a follower. I'm a student of the Austrian School of the Economics, and basically the Austrian school has something called the, not too surprisingly, Austrian business cycle theory. And what they say is the key influence on the economy, when you're looking at it from the perspective of real estate and stock market, which is considered capital goods, and then you have something called consumer goods, which are things when, if we go to McDonald's or something like that, that's a consumer good. What happens when a central bank like the Federal Reserve prints money? They push the structure of the economy in a way where it goes into the capital goods sector, which is real estate and stock market, versus the normal ratio between capital and consumption. And when the Federal Reserve stops doing this at some point, then that whole sort of false, manipulated structure collapses. And in the summer of 2008, it was obvious that the economy was collapsing. The money supply was crashing, and as I point out in the book, there are a number of comments I made throughout the summer of 2008 saying, "Watch out! I don't think Bernanke realizes what he's doing here. This thing is going to be a crash. It's very serious. It could be worse than the Great Depression."
Right. Now, what made you decide to write a book about your speech? And let's get into the speech a little bit. What made you decide to put together a book to where you wanted to share it with the world?
Yeah, well, I think it's important to get out there that these things aren't mysterious. They don't come from out of nowhere. That there is a reason they come about, and there's a theory that explains it. Actually, in the book, I touch upon this, and I have a chapter even prior to my specific warning in the summer of 2008 with regard to the stock market crash. The two Federal Reserve economists by the name of McCarthy and Peach wrote a paper saying why there was no housing bubble. Now, they wrote this in 2005, and I responded immediately at that time and said they explained why they were looking at things wrong. And I said they were making the greatest mistake by saying there was no housing bubble, since Irving Fisher in 1929 said that stocks were at a new permanent high just before the crash. And as things turned out, we did have the housing crash, and then we had the whole full-fledged financial crisis, which I detailed in the summer of 2008.
Right. Now, on the cover of your book, you actually list a couple categories of which you gave the Feds an F. Explain some of those categories for us, and how did you go about giving them those grades?
Okay. Well, it really goes across the board. In the first place, what I do is I look at methodology. The Federal Reserve uses a faulty methodology. There's a famous economist by the name of Friedrich Hayek who wrote a book called The Counter-Revolution of Science, where he explains that economics is different from the physical sciences. And what a lot of economists and the Federal Reserve economists try to do is they try to mimic the physical sciences. In physics, you can pour a certain amount of gasoline in a rocket, and you can predict exactly how far the rocket's going to go. There are no quantitative numbers that are the same in the field of economics. So they're trying to do something they can't, because they put these equations together and they blow up with it when they do that. The subprime market is an example of that. They assumed a certain default rate, and other things change, which caused the default rate to blow up. And voila, there's a perfect example of why you can't use mathematical, empirical studies that you can use in physics in the science of economics. But you go beyond that, and basically, with regard to the stability of money, it's phony as far as the way the Fed presents it. The money has been depreciating the dollar for decades since the Federal Reserve existed. I detail the numbers. It's dramatic what's going on there. And supposedly the Federal Reserve is the outfit that is supposed to be protecting the economy, and all we have is boom bust since the Federal Reserve's been around. There's been some before that involve other central banks, but the central bank has done nothing. It's a myth that they're able to stop this boom bust cycle, and in my view, they're the ones that create it. So they're just a failure across the board.
All right. Now, if you don't mind, let's go back to that day we had a chance to actually meet them. The morning you woke up, I mean, assuming prior to, only just being able to be a commentator and a syndicate host of your show in regards to what they do. Now you had a chance to actually go in amongst them and, sit down and talk to them. What was your thoughts and feelings? I mean, were you excited? Did you kind of have everything ready to go? Or give us a little replay of what you felt going into that meeting?
Yeah, that's really a good question. The thing that I'm an extreme critic of the Federal Reserve, so I really did not believe that I was getting the invite to go there, and I expected it to be canceled at any minute, even when going through. In my book, I write, you have to go through two checkpoints and all this kind of stuff to get in there, and even at that point, I wasn't sure that the event would occur, and so what happened was I thought to myself, well, I'm in this building, even if I have to give the speech in the my prepared speech in the bathroom, I'm going to do it. I'm in the Fed, and the truth needs to be told here.
Yeah.
But one of the economists came down and was very nice. They were very, very kind people, and he said, there was a delay on some of the other economists coming, and that really did not surprise me, because they actually attempted to cancel the event at one point. So we sat down with him, and then actually both McCarthy and Peach were there, and they had tables set up for many more, probably two tables, I would say probably 30 or 40, and it did not look like anybody else was going to come. So I just said, look, I have things I have to say in this building. I need to get them out. And I just started with my speech. And of course, you've read the speech, so it's extremely tough on the Federal Reserve, and the speech went viral after that. It's in the book in full.
Yeah.
And they were a little bit, let's put it this way, a little bit upset when at what I was reading for obvious reasons, for anybody who's read the speech. And then basically what happened was that I took questions right after. I went right into it, and they were really both interesting guys. They were very, very curious about Austrian school economics. What amazed me is the lack of understanding they had about Austrian school economics. They really didn't know Austrian school economics at all. As a matter of fact, one of the economists said to me, he goes, "So I know what you Austrian school guys are. You're the guys that have the equation MV equals PT," which really shocked me, because that's really a Chicago school equation, and not something the Austrians respect at all. But it showed me that they not only did not understand the Austrian school perspective, but they didn't understand the Chicago school, which is very closely associated with Milton Friedman. They, by the way, are Keynesians, and they hold the view that the government should be involved to protect against business cycles. And again, I think they create them. And I detail in my book exactly what I said in the summer of 2008 online, and warned, I can't believe Bernanke's doing this. This crash is coming. It was right out there. And prior to that, I did the critique of the Fed paper that said there was no housing bubble. So I'm online on record. Mm-hmm. They can't deny that.
Right. Now, I mean, my question would be, why would they be so concerned or interested in hearing an opposing viewpoint than their own? Like, is it something so they can get a feel for what other people are thinking, or I mean, why would you bite someone in that you know is critical of you already?
Yeah, that's interesting, Michael. I think what it is that there are some economists at the Federal Reserve that are curious, that want to learn, that want to understand. On the other hand, that's not the total perspective. Okay, what happened is when we finally agreed that I would speak at the Federal Reserve, they sent out an email to all their economists across the New York Federal Reserve, and that was killed within 5 minutes. I mean, it was amazing. So there's clearly a lot of people that did not want to hear what I had to say, did not want me in the building. But I have to give credit to McCarthy and Peach. I mean, they were decent guys. They were willing to listen, and we discussed things after. And I think for the first time, because they really didn't understand Austrian school business cycle theory, but the first time it opened them up to that. But there was definitely an attempt to shut me down, no question.
Right.
And then there's people, even after I gave the speech, that for other insane reasons attempted to shut me down. It just doesn't stop. When you tell aggressive stuff like that, you know, it's there are people that don't want that up there.
Right. You think you ever get a chance to get an invite to go back?
I don't know. I haven't tried, and they haven't contacted me.
Yeah. Now, as I was thumbing through the book, some things stood out to me that was just, mind-boggling. It was more so the statistics on the increase of the money supply as well as the prices at the consumer level. How I think it was 12,230% as far as the increase in money supply, and 2,241% on consumer price index. So, those are some crazy numbers, which people, it blew my mind. And so break that down to some smaller details for the commoner, your everyday 9-to-5 worker, Wendy's, person who has no financial background. What do those numbers mean, and how important are they to understand?
They're important to understand because basically it shows you how much the money supply, the dollar is deteriorating, and how much it's deteriorated since the Federal Reserve started in 1914. I mean, basically, what you have is a steady erosion of the value of the purchasing power of the dollar, which makes it extremely dangerous in most cases to be holding a lot of cash, because your cash is going to buy less and less over time. Now it gets tricky because it is as I like to remind readers at the UPJ Daily Alert, it is a cycle. It's a business cycle. There's a boom part and a bust part. And in the bust part, what happens is people tend to hoard cash, and cash becomes more valuable because of that. So you have to. It's really tricky as to what goes on, and basically, people need to understand, if you pile up cash, it's in the long run, it's very dangerous, especially with interest rates where they are now. People should not be in the bond market at all. I believe it is absolutely insane at this point to be holding long-term bonds, because I expect interest rates over the next few years to skyrocket, and those bonds will be worth less and less in value if they were to try to liquidate them on the open market. And by holding them long term, what will happen is when they get the money back, the purchasing power will be a lot less.
Hope you're enjoying this conversation with Robert Wenzel. I want to take a quick second to direct all my Android lovers to the Google Play Store, where you can get a chance to download the RTD app, an opportunity to stay in tune with all the RTD interviews as well as monetary updates as they release. Back to my conversation.
Right, purchasing power is key. I'm as I mentioned, I have done some traveling, and so I tend to keep up with countries that I've been to, and Venezuela being one of them. And I actually ordered some of their currency online, of which it's $187, for all denominations, but yet according to the black market and what they're actually able to purchase is basically 30 cents, 28, 29 cents is actually what they're worth as far as what they can purchase. And so just another example of how, fiat currency, unbacked fiat currency, can be dangerous. And so that just points at the idea of holding a lot of paper, that one day,
Right.
There might be a problem with that. So
Right, especially Venezuela is a very good example, because their currency now, the inflation rate there is around 800%. It's dramatic. I don't necessarily think we'll see that here anywhere in the short term, but there's a very strong, right now it's a very, very delicate period because, as I say, there's problems in China. We've got a little bit of short-term slowdown in money supply, which I think might reverse itself in the very short term. So there's a lot of complex factors going on here. But the trend will be towards higher inflation here, much higher than people expect. The Federal Reserve is doing what they call a target of 2% inflation, which I just think is an insane idea. I don't know why you would want any inflation, but secondly, how they're going to be able to control things. They're not going to be able to fine tune things to the degree that they give the depression impression they can do, and the possibility of them actually stopping inflation when it hits 2%, I think is a pipe dream. It's not going to happen. There's a very, very great danger that it's going to get out of control, and we'll see first stop 3%, then 5%, and then who knows, maybe 10%. It's too complex to predict the exact things of what will happen when, but you can sort of sense trends and see what the potential, what the possibilities are, and that's what I see down the road in a sort of medium term.
Right. Now, let's get into some current things happening. Give your take upon how things have changed or improved or gotten worse. I mean, are we in an economic recovery, as the mainstream media says? And so what's your thoughts since 2008? Where are we at right now?
Yeah, basically, and I've been saying this for quite a while, it's a boom-bust cycle. And the Federal Reserve has pumped in a tremendous amount of money since the 2008 financial crash, literally trillions of dollars. And basically what you have is the ramifications of that. You've got the boom phase. You've got a very strong stock market out here. I'm in the San Francisco, Silicon Valley area. And basically what you have, you see it every day. The prices for real estate are going through the roof. There's all kinds of ventures being started that have no chance of surviving long term. I was just talking to somebody. There's a company out there. I won't mention the name. They just have a $10 billion valuation put on them, and there is no way this company survives during a crash. It's structured for the boom phase, and the minute the bust phase occurs, this company's going from 10 billion to zero. So basically, you have those kind of problems out there, and then what you've got is the potential at some point for the break. Now, right now, as we speak, Michael, we're in a very, very delicate period where we could have a return to more money printing, which is going to boost things even more, but it's really going to start up the inflation, or and the Federal Reserve is sort of like a driverless car at this point. They're really not watching money supply, which I think is totally insane. Since Janet Yellen has become chair of the Federal Reserve, she is not mentioned in a speech. She is not mentioned in the minutes to a Fed meeting. She is not mentioned in a policy statement. Money supply at all. They sort of, I'm sure they get the data and look at it a little bit, but they're not focused on it. They're looking at other numbers, which are secondary numbers. And so you've got money supply really dropping dramatically right now. It's still only for a short period. So again, it could turn around. There's seasonal reasons it might. But if it doesn't, we're going to go into a crash phase again. But right now, we're still in the boom phase. There are people out there that are deniers that are saying it's not a boom phase. It's a boom phase. Unemployment has dropped from 10% to near 5%. It's at 5.3% exactly right now. And basically, you've got a situation where the stock market, real estate, where you would expect things to go, climb in a boom, are climbing. That's the definition of a boom of an Austrian school business cycle theory, and it should be in most other business cycle theories.
All right. Now, what are your thoughts on the reserve status of the dollar? We have all the BRICS, Development Bank, AIB. So all those organizations that are taking root now, do you question or think that in the near term, long term, that the dollar might be in jeopardy as far as being the sole vehicle of trade?
Yeah, well, Michael, that is the big question. Every country, every central bank is holding significant amounts of U.S. dollars. And basically, if the attitude changes at some point that they do not want to hold the large amount of dollars they're holding now, you're going to see a flight from the dollar that is dramatic. And then you're really going to see inflation in the United States. It's a terrifying thought. It's just sort of hanging out there. We don't know exactly when it will break, if it will break, but if it does, and there's no reason it can't, watch out. The amount of dollars that could hit the shores of the United States coming back are again, we're talking trillions, and that would push oil prices up, push all prices up, push imports into the United States up. Just a dramatic inflation impact. Gold would certainly double from here.
All right. Now, are you in the camp of perhaps a hyperinflation, or do you think that's a possibility, or not, with all those dollars flooding back in?
Well, it's tough to say. I mean, I can see double-digit inflation. Certainly 10%, maybe some above that. But then it really comes down to who's in charge of the Fed at a given time. If you've got people that are sort of watching things to a degree, they may not say they're watching the money supply, or may not understand that, but they realize that if inflation goes up, they have to increase interest rates, and they do that by really shrinking the money supply. So it's sort of a two-step process. They don't understand the core thing, but they understand secondary things. If the right people are in charge, the inflation can be killed. We had Paul Volcker killed inflation when he became the Fed chairman in the early 80s, and basically the guy before that was a guy by the name of G. William Miller, and that was the closest that the modern day United States, Federal Reserve United States, came to a hyperinflation. I mean, he was really printing money dramatically, and it looked like it was going to get way out of control. And then, he was replaced by Paul Volcker. Paul Volcker slammed the brakes on and said, "We're no longer watching interest rates. We're not doing anything. We're going to stop the money supply from increasing." Of course, we had a downturn in the economy, a dramatic downturn because of what he did. And then basically what happened is he started printing again in 1982. But he snuffed out inflation. And we're actually seeing some of the ramifications of that even now, because gold was climbing dramatically at that time and everything else. And he just killed that idea that you had to be afraid of inflation. But now that's sort of forgotten, and we're teetering on serious inflation, but I wouldn't call it a hyperinflation. And you've got Janet Yellen as Fed chair, and you have Stanley Fischer, who I think is an important Fed official, as vice chairman. And basically, I don't think those two would let it get too much above 10% before they would start clamping down. Again, on wrong theories, but I think they would clamp down. If somebody else comes in, you get another G. William Miller that doesn't understand the economy at all, or doesn't understand the Federal Reserve. I'll tell you a quick story, Michael.
Yeah.
I know one of the top aides at the Federal Reserve that was an aide to Paul Volcker, Alan Greenspan, Gene William Miller. And they said they could tell how intensely they looked and studied the data, because they would hand them a 20, 30-page summary of what was going on in the economy. And then they would sort of look back a week later to see how many pages were turned, because it was stapled together. So they could tell if somebody turned them and folded them and read them. And Paul Volcker would always read the executive summary. So he flipped the 2 pages. Alan Greenspan, who was a statistics junkie, read through the whole thing, so all the pages were bent. But when G. William Miller was president, there were no pages bent. He didn't even read the summary of what was going on in the economy or anything else. So, it really depends on who's in charge there at the time. At this point, I disagree completely with the current Federal Reserve is doing, but I don't expect that these people in charge to allow the inflation rate to get much above 10%. 10%, a little more, yeah, they could get there by accident, but then they would stop it. If somebody else comes in, who knows?
All right. Now, as we draw towards the end of our discussion, I wanted to at least touch on the whole topic of what's going on in Greece. I mean, what can Americans or other countries outside of Greece learn from this whole debt fiasco there?
Yeah, I'll tell you the most important things. I mean, there's stuff at a macro level, what the European bankers are doing to Greece, how they're squeezing the Greek people. It's terrible what's going on. But the thing that's most important is how governments react. We had statements from Greek officials the day before they closed the banks, and they said we are not going to close the banks. So people should remember that. Nothing is confirmed until officially denied. So when the officials go out there and say, we're not closing banks, it's time to pull your money out of banks. You should always have some money out of the bank anyways. Keep it under your mattress. You should have 3 months at a minimum of living money outside the banking system. 6 months, that's just emergency funds, depending upon your overall financial worth. You may want a lot more. Keep some in gold coins. But a bank can be a very dangerous place. There's talk now they might give haircuts to people who have money in the banks. And by haircuts, what they mean is if you've got $100 in there, they'll give you a haircut of 20% and let you pull $800 out, and you lose the rest. So the banking system is extremely, extremely dangerous. And the lesson learned is diversify, keep some money out of the banking system, because you just never know when things are going to get tough, and when they do, you're going to be the only time they're going to tell you what's really going on is after the door is shut, and they'll tell you, yeah, the door is shut.
All right. Now, last question. In your opinion, what will the dollar look like, the Federal Reserve note look like in, say, 2, 5, 10 years from now, in your opinion?
Well, actually, I've got a different answer for you on that, Michael.
Yeah.
I can tell you that the $10 is going to have a woman on it. They're taking Alexander Hamilton off, as Bernanke's having a big huff and puff about that. I actually think Hamilton was a real bad guy in many ways. He reminds me a lot of the Greek negotiators who absolutely botched the negotiations with the European banksters. But he may be replaced by a woman. But getting more serious, that's the intention. But getting more serious, the dollar is going to continue to depreciate. It's just a question of how quickly it will depreciate. That's why things are so crazy. You know, you keep money in the bank or somewhere where you can earn interest or earn something on them, and it becomes dangerous. You pull it out, and you're going to lose value if you just keep the money that way. So you sort of have to diversify. You know, keep some in cash, some in gold at different times in the stock market. Not necessarily now, except in maybe inflation hedge stocks, but you've got to do a lot of diversification and be aware of the many, many ways the Federal Reserve and the banksters can get you.
All right. Well, Robert Wenzel, editor and publisher of economicpolicyjournal.com and Target Liberty, thank you for sitting down, and also the author of the Fed Flunks. Thanks for sitting down with us and sharing your take as well as your experience and having a chance to present before the Fed. I want to give you a chance to, I guess, share your where you can be located at and things like that, and how to get a hold of the book. I'll put a link below where they can get a copy of it, but just give you closing thoughts.
Sure. The best place to go where everything flows from, I've got a number of different projects and things going on, but go to economicpolicyjournal.com. You can just Google EPJ, that's Edward Paul John, and most of the time, Economic Policy Journal is the first ranked link on Google, but it's economicpolicyjournal.com. There's a link on economicpolicyjournal.com to my book called the Fed Flunks, My Speech to the New York Federal Reserve. It's available on Amazon, Barnes & Noble. You can order it in any bookstore. Target Liberty is another site I have. There's a link to that from Economic Policy Journal. And my podcasts and everything else are there. So economicpolicyjournal.com is the place to go, and from there you can find yourself pretty much around to anything else I'm doing.
Well, Robert, thanks for sitting down with us. Look forward to continuing to follow your work, and hopefully have a chance to sit down with you and talk again about some other events that's occurring.
Yeah, great. My pleasure. Thanks, Michael.
Have a good day.
You too.
Well, this concludes my discussion with Robert Wenzel, editor and publisher of the economicpolicyjournal.com. Hope you found this conversation to be very informative as well as entertaining. I want to encourage you to get a copy of his book, The Fed Flunks, My Speech at the New York Federal Reserve Bank. Just scroll down below, click the RTD bookstore, where you can get a copy there directly from Amazon. And also, I will be interested in hearing your thoughts on this interview. feel free to leave us a comment. And if you thought it was informative, feel free to share it. I want to also direct you to rethinkingdollar.com, where you get a chance to test your money IQ, as well as get a copy of my free ebook, The Simplicity of Money. And also visit me on Facebook, where I share monetary news daily. Looking forward to bringing more interviews to you. See you later.